Welcome to the podcast Venture Capital in Scandinavia. My name is Esben, and I have worked in the venture space for the last 8 years, both as an investor and an operator. In this podcast, we will explore both trends, opportunities, and challenges from both the Danish, Swedish, and Norwegian ecosystems, and we'll focus on venture capital both from the investor side and from the companies who receive venture capital funding, and we will keep a strong focus on the Scandinavian countries. I am very happy to introduce our first guest, Max Samuel, who is a partner at Snö Ventures, which has been for 4 years now. And before moving to Norway and starting with Snö, you worked for Peter Thiel in LA, which you did for 7 years, right, Max?
Yep.
Thank you for joining me here today. And we know each other. I was introduced to you, I remember, by an old colleague who said, there's this guy who also works something startup related. I was like, sure. This will be interesting. Let's wait and see. And then he's like, he works for Peter Thiel. I was like, oh, okay, that's pretty exciting. And that's how we met. And you were thinking about moving to Norway, which you end up doing.
Yep.
Was it during COVID you moved, or was it after?
It was right in the middle. Yeah.
Right in the middle of COVID.
That's right. And you were a huge help in connecting to interesting people and kind of the right people to understand the Nordics better while I was still in LA, and then also helping me kind of, make the right connections and good connections in the move too. So yeah, it's been a good 5 years and appreciate it a lot.
Appreciate that. I hope I wasn't trying to set you up for for saying that, but I appreciate that, Max.
Yeah.
But Max, could you tell us a little bit about how you ended up investing in venture capital? How did you? So you have a legal background. Yeah. How did you end up in the venture capital space in the first place?
Yeah. Well, thanks for having me. It's great to be on the show and great to be the first guest. So much appreciated, and I'm honored. In terms of my background, so out of college, I did what pretty much all the rest of the people at school were doing. Moved to New York. Joined an investment bank, and that seemed to be what everybody was doing. So I went into investment banking, and it was right in the middle of the financial crisis, 2008, 2009. So it wasn't the best time to be sort of in a learning environment, especially on the desk that I was on, which was the equity capital markets desk. And so I ended up leaving about a year in, and decided to go to law school and sort of approach capital markets, venture capital, entrepreneurship from a different angle, which was the legal side. And so after law school, moved out west to San Francisco, where I joined a law firm called Wilson Sonsini, which is, has been advising very big and prominent and very small and up and coming tech companies for the last 60 years or so. And then, eventually moved to Thiel Capital, which is Peter Thiel's family office. And Thiel Capital was a place where I could bring together a lot of my past experience and interests, and it was a very entrepreneurial environment. So I joined as one of Peter's lawyers in 2014, and the role kind of evolved from there. I ended up being associate general counsel and chief compliance officer, but also as I was spending more time in the Nordics, in addition to you being a good entry point into the Nordics, my wife is also Norwegian. We were spending a lot of time here in Norway and in the Nordics, and I was helping think about what an investment strategy would look like, from Peter's office into the Nordics.
Yeah, because can you just tell me a little bit about that? Because when we met, you were looking into Scandinavia to maybe do some more investments. How did that start, and what was the whole idea and the whole thesis around this? Was that it was underinvested in terms of venture capital, or what was the idea?
So it was, again, so Peter's office is, if you have an interesting, compelling, sort of different idea from what was currently happening at the office, you could really present it to Peter and say, hey, does this seem like something we want to pursue? And so he was supportive of looking into this. And he had some success in the past investing in the Nordics. So Spotify is probably the clearest example. Founders Fund was an early investor in Spotify, and had made a few other investments into the Nordics. Portal One, which is a good Norwegian company. And so so that was really it. It was, hey, there seems like, a great opportunity. There's this interesting sort of foundation within the Nordic ecosystem of, great education, smart people, a lot of early stage support from the government, and maybe there's kind of this unlock in value that we can help create by having, a larger pool of capital at a later stage, to bring these companies sort of from that very early stage into growth, global sort of scaling growth companies.
How do you think that the experiences you have from being an American and working in the US and working for Peter Thiel has shaped the investment approach you have now in Scandinavia?
Yeah.
Are there any specific sort of investment philosophies that you brought with you? Any sort of major, perhaps a strong word, but any learnings you've had in that area?
Yeah, I think one that's really interesting that applies in an interesting way to Scandinavia is Peter has this core sort of philosophical belief around the power of mimesis or imitation, and it's this idea of the mimetic theory, and basically the idea is that all desire, and this is pretty kind of macro, and then I'll bring it a little bit more micro, but the fundamental idea is that all desire is really an imitation of other people's desire, and people want things because other people have said that they're worthwhile. How does that apply to venture capital? It's like, I think it's pretty relevant in the way investors behave, and it's also pretty relevant in the way that founders behave, right? And so it's like the idea of venture capital and building these companies that are sort of fit within the venture capital mold is that you have to be kind of thinking differently, and you're looking for kind of exceptional, non-standard things. And so by definition, they can't be coming from a source of imitation or mimicry. And I think that's particularly interesting in Scandinavia, because I think Scandinavia has a reputation for being that way, from a cultural perspective. And it's not only sort of like a minor feature of society, but it's actually like a core, in some senses, pillar of how society functions so well, is that it's relatively homogenous and somewhat conformist in a way. And it's even kind of codified in a sense through this law of Jante code of conduct, which is basically like, you shouldn't act in a way that's exceptional, right? You should sort of like fall into the mold, and that's the way you should behave. So it's interesting to think about, then sort of tying it together, this philosophy of like how people generally behave, where venture capital fits into this sort of philosophical idea, and then how it applies to a country or a region where this is like it's very commonplace and very almost supported to be conformist.
Are we too conformist in Scandinavia? Are there enough people who are bold enough, who think big enough to sort of, what can you say? Yes, we're a smaller region than the US, but will we ever be as successful, like based on what you say, right? If we are more conformist, then we perhaps have less people who want to take that risk than you have in the US. Do you find that to be sort of an issue? It's more? Do you think it's more difficult to find those people who think outside the box and who want to take that bold jump, so to say, and think big?
Yeah, I think there, and this is also a place where it might be good to have some nuance to, as opposed to grouping Scandinavia or the Nordics as a whole, to kind of dividing it up by country a bit. So it's like, I think, maybe as a whole, the society or culture is working against founders more than it would be in the US. But in a place like Sweden, again, for example, using the Spotify example, you have people to imitate in a sense, because you have highly successful founders like Daniel Ek, who have kind of paved the way for this is actually a viable career path. This is a viable way of life. And so even if you have to accept the fact that people are conformist, like there's actually someone to conform to in a place like Sweden, an ecosystem like Sweden. I think Norway is still working on that. It still feels to me like it's very much a different path to go into entrepreneurship as opposed to go into finance or consulting or or oil and gas. And so I think Norway is still working on that.
Yeah, and on the back of what you just said, I also think, at least from my experience, I started out in the sort of venture space in 2017, I think it was. And back then you didn't have a lot of sort of success cases you could look to. There were a few, but like as time has gone by, you also have more and more of these cases where you've seen, wow, just like you have your Spotify's in Sweden, you have remarkable Kahoots and ETA, you name it, where you can look to these companies and you say, wow, they did it, and I want to do the same thing. And they are starting to reinvest in the ecosystem. So you are seeing more and more of that. But I agree with you, there's still some way to go for Norway. And it will be very interesting to see now, as you're seeing sort of this recycling of talent who's been on that journey with these companies. That'll be very exciting to see in the years to come, I think.
Yeah.
But also based on what you said, Max, there was one thing I was wondering, it's very related to the question I asked before, but what do you think, like what practices from the US or the sort of ways the ecosystem is run in the US do you think we could benefit from in Scandinavia and vice versa? Are there anything perhaps you don't want to see being brought to Scandinavia?
One thing that I've found difficult in operating here is a lack of consistency in sort of market standard and market practice. And so focusing on early stage VC, which is where we mostly are, almost every deal we do has a different set of documents, has a different sort of understanding from the founder and from the company's lawyers of, what is standard. And so it's just this difficult back and forth on something where in the US is pretty simple. It's sort of like, we're going to do the docs according to, the YC docs or the NBCA standard. And it's just sort of like, okay, you get that part of the deal done and you move on, and it's cheap.
And what do you think that is? Is that because it's sort of an immature market that we haven't set that one standard yet, or?
Yeah. And so you've got, deals done a bunch of different ways in Norway, and then you have the deals in Norway are very different from the deals in Sweden. And you also have differences in the regulation. And so you have to be mindful of structuring a deal as a convertible note and having a debt feature in certain countries, because, that can be harmful to the company to have, this debt outstanding. So you can't do it in that way in one country, but you can in another. So it's just this difference across the countries in terms of the regulations, but also I think it's just immaturity of the ecosystem in setting a standard.
Yeah, complicates for the investors, but also I guess for the founders to navigate in all of this, right? So
yeah, and it's expensive, and and then something I think in Norway that people are founders are rightfully upset about is the way in which they're affected by the wealth tax. So you've got founders that own meaningful parts of their companies, call it, a founder owning 40% of his or her company. The company raises a Series A at $100 million valuation. Now all of a sudden, that founder has $40 million of wealth on paper, which they have to pay a wealth tax on. They may or may not have the cash to do it. They have to sell their shares to get liquidity. These shares are relatively illiquid. It then sort of also in the eyes of investors shows, adds this question of, well, why is the founder selling? Like, do they not have conviction? So that's another piece that I think is detrimental to founders here in Norway.
Yeah. Oh, no, if we get down that path of discussing all the political issues related to the space, which also has definitely a lot of improvement, what can you say, to do. But if we were to sort of, look at the positive side, what do you think, what do you think the aspects of the ecosystem and the venture capital's landscape in Scandinavia that you appreciate?
I think there's a different mindset, and it's a positive sum as opposed to zero sum mindset working in a developing market. And so, I think the U.S. is developed, and there's a lot more kind of zero sum behavior. And so everyone's sort of competing and fighting for pieces of the pie. Whereas in Norway or the Nordics more broadly, it's a developing market. So people are really working together to make it better and to add value as a whole. And so I find that there's this really good collaborative spirit across investors, across founders, just to improve the positioning of the ecosystem, to address with politicians. There's a good community here in Norway called NAST, the Norwegian Alliance for Startups in Tech, which is a great example of investors and founders all coming together and putting forward this effort. So that's something that I've found here I think is great. And I try to do my part by bringing in lessons from the U.S. and bridging the gap so that people's network can expand to the U.S. So I think this collaborative spirit is really good.
I agree. It's there seems to be like there's definitely this community feel, which is very nice. It's, all right, Max. Now I'm going to ask a little bit about sort of your personal sort of history in this space, and I want to focus a little bit on a failure you had in venture capital. It could be a deal that went completely sideways to something you thought was going to be great and turned out not to be great. We hear so many success stories. I enjoy hearing about the failures and then also hearing about what people learn from that. So if you would be okay sharing a story, it could be an investment. It could also be something, a hypothesis you had that just turned out to be completely off.
Yeah.
But there's something where you failed and you learned something.
Yeah. There's probably a lot to choose from here. But trying to tie it to this broader conversation. I think one thing that is very important between investors and founders is building this relationship of trust both ways. And anything you do, I can speak from the investor side. Anything you do from an investor perspective to put that trust into question is just very bad, because you're looking to build. One, it's a small community, and two, you're building these relationships for 7, 8, 9, 10 years, and so it's important to have a really good foundation going into this and into these relationships with founders. And so one place, and this goes to sort of this transition from the U.S. to the Nordics and some of the stuff we were talking about earlier in terms of this lack of market standard. One place where I've found difficulty, and I think it put the trust into question at a very early stage between me and the founders maybe was this transition from the term sheet stage to the kind of formal agreement stage. And there was a lot that I think was left unsaid in the term sheet, because again, going into my mindset, it's sort of like you've got a basic term sheet and then you have a basic set of terms within the formal docs that back up that term sheet, and it's pretty standard, kind of 1 to 2. But there was so much that was unsaid in the term sheet stage, and when we got to the docs, I had a picture in my head of what that all would look like. Founder and the company attorney had a very different view. And so when I brought forward, what I thought the doc should look like, it was sort of like, well, hold on a second. Now you're like retrading the whole deal. You're renegotiating everything. Like you're throwing in these terms that weren't there. And I think that was something where I said, okay, I have to take a step back, and I have to be very clear with what I mean, and have to have an appreciation for the fact that, I come from a different place, and there's sort of a different set of understandings. And so the learning there, I think, is just to, understand and respect that there's a different way things are done in different places, and just to be as clear as possible from the very start.
I guess it's also like having been sitting with companies and speaking to lawyers about the term sheets. It's slightly terrifying when you look at all this legal language, right? And not knowing, as you said, there are no standards, and then looking at all this and not knowing if you're being fooled, and you don't want to spend too much money, given you're a startup and you save that cash for other things. You don't want to spend too much money on lawyers either, and then you just look for that trust, right? So I get that.
Yeah, and I've also found that there tends to be a little bit of a distrust from more than I think I was used to, of distrust between founders distrusting investors more often.
Now, or Scandinavia versus the US?
Yeah, Scandinavia versus the US.
Yeah, okay.
And I'm not sure why that is. I think part of it might have to do with sort of the way that private equity, which is just a very different type of investing. There's different requirements in terms of, for good reason, in terms of control, in terms of redemption rights, in terms of veto power at that later private equity stage where investors are taking a significant minority or even majority stake in a company and need those protections. But I think those terms, at least in the early days of maybe Norwegian or Nordic venture capital, were being applied to early stage companies, and founders felt like investors were being just a little bit overbearing in terms of how they approached investments into early stage tech companies. And so I think it feels like there's a little bit of a residual effect from that in terms of how founders sort of expect investors to behave or are concerned that investors will behave.
Yeah, I think you're right.
Yeah.
I think, or at least my perspective on this is that I've seen sort of the same thing, that there's been a strong history of private equity in the region, right?
Yeah.
And that way of investing and that way of thinking about deals has sort of carried over, not for all, but for some investors.
Yeah.
Which, when you're then a founder, you're speaking with investors, you need to really figure out, do they actually, what can you say, understand how this works, or are they operating by another model, a more PE-like model, at least in the terms. So yeah, it makes a lot of sense.
Yeah.
If we are to look at and talk a little bit about talent and team building, where do you think that Scandinavia, and again, you have more experience from Norway, where do you think that we excel?
Yeah. I think one thing that we try to identify a lot at Snö Ventures, and I don't know if I gave too much of an introduction on it, but we're an early stage, mostly pre-seed and seed stage fund focused on the Nordics. One thing that we try to identify is companies where it makes sense that the global category leader would come from the Nordic region. And so I think there are some really interesting places where that applies. And yeah, again, sort of one thesis that I've been working a lot on and thinking a lot about is this idea of, again, going back to Peter Thiel, he has this argument that America has gone through this stagnation since the 1970s, especially as it applies to atoms or sort of the building of physical things versus bits, software. So there's been this huge advancement in technology around bits, but relative stagnation in atoms. And it's sort of like, okay, well, why is that? I think it's because there were these early successes in Silicon Valley, and there was a lot of advancement in software industry. And so then you have this talent that is sort of driven towards software, and people are going to school and receiving an education in computer science or software engineering. And it just makes much more sense to do that in terms of a financial incentive than going into mechanical engineering or electrical engineering. Some of these educations that would apply much more to building physical things or physical technology. And so that sort of, is a self-perpetuating cycle. There's this incentive to go into software. The talent goes into software companies do better. The talent goes in, they get paid more, et cetera. In Norway, focusing on Norway, at least for now, the opposite sort of existed. And you have this huge oil industry that was this major concentration of talent. And in order to succeed in the oil industry, people are focusing more on electrical engineering, mechanical engineering, these kind of harder sciences. And so I think where has that left Norway in terms of its competitive standing, maybe just versus the US or sort of like the broader developed world, is that you have this talent base that's incredibly skilled in building kind of physical technology and building atoms. And so as as people start to explore again in Norway beyond the oil industry, where do they go? And so I'm really excited about companies that are building, in the atoms, building in the physical space. It doesn't have to be pure hardware. It can be sort of software enabled hardware, but taking these skills and talents and experience from the oil industry or from training for the oil industry and applying it to tech advancement. So I think that's a great source of talent here in Norway. And I think there's examples like that kind of across the Nordics, these unique features of the culture or unique features of, it can be, your geolocation in terms of being close to the poles in terms of, or sort of the North Pole in terms of, the aerospace industry. So I think there are these really interesting features of the Nordics that we try to pursue that have the potential to really benefit companies.
It's very interesting. It's a very interesting thing because I remember like when I started out in venture capital and we looked at this, there's like just so much talent in the region, but like so little of that talent actually, at least at that point, went into the startup space. Yeah. And still, if you look at it today, it's I think it's better now, but it's still quite a small percentage, right? Yeah. So it's interesting to see like if you have people using sort of say those industries as a stepping stone at some point to actually getting into the venture space. Yeah, that would be good. Are there any areas where you think that we in Scandinavia are falling behind in terms of talent, like any type of talent that you think we could say we greatly miss, or where we're definitely not good enough?
Yeah, I think one thing that is always good, and we always try to see more of, is people kind of aspiring to get outside of the Nordics at the right time. And so it doesn't have to be right away, because I think there can be a lot of benefits to growing and nurturing and testing a product within the Nordics, but there has to be a time where there's like a clear vision to expand out. And one thing that we see fairly often is companies that just say, well, hey, we're going to take Norway in the next 2 years, and then we're going to take Sweden, and then we're going to take Denmark, and it's kind of like it's still somewhat kind of at times a local mindset.
And to that, do you think, and we discussed this in the beginning, do you think there are enough founders who think big enough? Are we bold enough? I mean, if in the US you go for this, there's much less of a safety net around you, right? Whereas here we actually do have a safety net, and there are other things to do. So whether you make it or not means perhaps a bit more in a country like the US. I don't know. We have a mutual American friend, and I spoke to him about this, and he's like, Esben, people are just not thinking big enough. They need to push much more. Yeah. What's your take on that?
Yeah, I think I really struggle with this safety net question a lot, because I think it cuts both ways. On one side, you have this safety net that's always in place, so you are afforded by that the opportunity to take as much risk as possible, because if you fail, you're fine. You try again, you fail, you're fine. So from that perspective, it's like, you should take a ton of risk because there's limited downside. On the other hand, kind of, I think what you're saying is that people are pretty comfortable, and it's like, why take all these big swings when I've got a Tesla and a mountain cabin and I'm pretty happy? So I still don't know which way it cuts. And I think it's hard to group, because these are, we're talking about people at the end of the day. It's hard to just kind of group people into this is how Norwegians are. But so it comes very much down to the individual level, and we find people that are being very bold and are truly exceptional no matter where they are, and thinking very big. And on that specific point, I still haven't figured out which way it ultimately cuts. I think it's probably person to person, but it's an interesting feature for sure.
That makes sense. Do you, if you were to think a little bit about sort of the ecosystem, and again, I say Scandinavia, but for you, since you're based in Norway, let's focus in a little bit on Norway. that will cover Denmark and Sweden more in one of the other episodes. In terms of the development of the ecosystem, what would you think will be the most important sort of development areas in the years to come? Let's say the next 5 to 10 years.
I think we've talked about most of them, or at least touched on most of them. I think a big one is improving these tax rules, figuring out a tax framework that works for founders. Maybe the rules as they exist work fine for large shareholders of big public companies that have highly liquid shares, but I think they're very tricky for early stage founders and sort of growth stage founders to navigate. Another is standardizing the market from a legal perspective in order to have deals get done more quickly, more efficiently, with less cost, and to reduce some of this friction maybe between investors and founders. Particularly in Norway, I think there's a really big opportunity in the Norwegian oil fund, opening up the opportunity for investment into private company or private assets. Right now, they're not able to, for the most part. I think there's a few small exceptions around renewable infrastructure, and maybe real estate, but they're not able to invest in private equity or venture capital. And I think by opening that up, there's the ability to really enhance the Norwegian ecosystem. You bring in more talent, you bring in more international attention to the region. More international funds would be interested in maybe setting up offices here. And so that has an opportunity. It's sort of this another one of these very unique features that one of these Scandinavian places have. It's it's not a very normal situation that a country of 5 million people has a $1.7 trillion sovereign wealth fund that has the ability to do something like this, unlock value like this. So even opening up a small portion of that to venture capital, I think would have a huge impact on Norway's kind of positioning within the global ecosystem.
Okay, that makes sense. There's one other thing I was wondering about, Max, and that in 2-3 years ago, when the market was really good, interest rates were really low, a lot of venture capital activity, also a lot of new funds popping up. Yeah. And then in the past 1 to 2 years, the market have looked quite differently. How do you think there will be a lot of first-time funds in Scandinavia that will shut down now? Do you think we will see more consolidation? How do you think, this period we've gone through and still in, I mean, interest rates are starting to look better on a sort of macro scale, but how do you think that will affect the venture fund market in Scandinavia? Yeah,
I think there was room for this growth in capital and fund managers in Scandinavia. So I think it was growth into something healthy, as opposed to maybe in the U.S. it was growth into something unhealthy, in the sense that there was just too many managers, kind of too much money being deployed. I think it actually there was a need for more investment going into early stage tech companies in the Nordics, and so I think it's actually been a pretty healthy growth. So I hope that these emerging managers aren't getting shut down, and I think there's room for them to do really well.
Thank you for tuning in to the first episode of Venture Capital in Scandinavia. I hope you enjoyed it. And if you have any good ideas for future guests I should be speaking with, or any good questions I should be asking, please don't hold back. Please just let me know. Try to find me on LinkedIn and write me directly. We plan to launch an episode every month, so stay tuned for the next episode.
All right. Yeah. But is this background work? I thought it might be a little too sunny.
Oh, it looks so nice. I was just jealous. It's like trying to look behind you to see. Now it looks really nice. And thank you for being on the podcast, Max, being the first guest. It's I'm excited. Also, I'll admit, a little bit nervous, because you wanna do well with this, right? And then interesting having a conversation where I've just taken all the questions to hide my own face, because normally I just sit, and maybe that tells you something about me, end up looking at my own face when I speak. Yeah. Which I don't know how good that is.
Probably a good idea. I've always found that like my phone calls go so much better than my video calls.
Oh, really?
I think that it's just like, you know, you're just focusing on listening and it's focused on talking and you're not focused on like, you know,
Might be.
what
We had
stain is on your shirt that day.
The CTO in Nordic had this hypothesis that men are actually not genetically geared to be looking at each other when we speak, because we used to go hunting, so we would look like elsewhere. So it's like actually you should go for a walk or not like sit and have to look at someone. That he thought that was more effective.
Yeah, that's something.